May profits be upon you. Welcome back to my YouTube channel. This is RT Money representing Lions Den FX. And we're going to take a look at the Euro USD for the upcoming week. We're going to do some top-down analysis, okay? Listen, first thing I want to do is take you to the weekly. Why? Because price hit a structural low here on the weekly. This point right here. You have to, you got to know that if it's hitting a structural point like this here, this is a multi-time frame, macro level time frame. All right, you're going to see this point on the weekly. You're going to see that point on the monthly. You're going to see that point on the 3-monthly. That's an important point. All right, that is super important. If price is coming into those areas like that you can see on multiple high time frames, macro level, not micro, macro. Okay, it's an important point. All right, and that's where we find ourselves. If you were to set a long here, you would have been in good standings, right? All right, now let's go back to the weekly. So we come here where price started the impulse, right? Or price displaced to the upside. The expansion started here. This is where I'm at. Now we could have put that. I could have marked this this order block from top to bottom here on this doji. That's the way I would have marked it. Okay, but we could refine it down to this area where the wick is. All right, that's where I want to take my my demand zone, and see how precise that is. All right, so once price hits here, we see that we have a very strong reaction, but we've got to consider how price entered into that POI very aggressively, very, this is very bearish, and it's has some momentum on it. All right, now let's go to the daily. Let's take a good look at this price action. All right, what are we making here? Lower lows, lower highs, lower lows, lower highs, lower lows. This is important. All right, now I went over this last week, so I'm not going to go over this week. Lower low here, lower high, lower low, lower high, lower low. We break this low. Every time we break a low, that's a lower low. And that makes this our trading range, right? If we go above here, that means the market's turning bullish, all right? It did, technically. It did go past that. You see that wick high past this high, all right? You see the wick high past that high, all right? But it didn't close. It did not close. So I wasn't convinced that price intended to go any higher because there was no volume. There was no momentum going to the upside. There was no follow through. Okay, I need to see some kind of follow through, that lets me know price is intending to go higher. So as it started to go down, I only react, right? I only react to what the market gives me, and price started going down. That's all that matters to me. So we break this low. We made a lower low. This is the lower low. This is the lower high. Period. All right, there is no discussion here. Okay, so with that in mind, with that lower high here, I would put my, put my Fibonacci up here, right? From the high to the low of the swing high to swing low. I'm going to stretch this all the way over here. All right, and what I want to see is at the 50% mark, the halfway mark, which is what I call equilibrium. All right, there's premium prices here, there's discount prices here, right? These are your lower prices, these are your higher prices. All right, I want to see price come back up into the discount area. Wow. This impulse is now in correction. All right. And I want to see it correct past the 50% mark so I could look for qualifying shorts to take lower, because we are in a bearish market. We're making lower lows, lower highs, lower lows. What comes next? A lower high. And what comes after that? A lower low, right? That is the expectational structural, the expectational structure point. And now, bearing in mind that we have bearish order flow, all right, I'm looking for a lower high to be made. That's it. You don't have to take it any further. Price is bearish until it's not. Price is bullish until it's not. You just react to what the market gives you. You look at the chart in front of you, and that's it, man. That's it. That's the basis of technical analysis. Just react to what the market gives you. Come on. All right. Don't start getting into predictions and holding a bias and then staying married to that bias. That's a bad move. That's a bad road to go down. Okay. React to what the market gives you. Okay, so let's go down to the 4 hour, which is where I live. The 4 hour, the 15, and then enter on the 1. That's what I do. Okay. All right. And what do we see? What do we see here? What I want to mark is what I missed. All right. I want you to mark something. I want you to keep something in mind. All right. What happened here? This was a demand zone. All right. We have a demand zone here that was violated. Boom. Right. This one becomes a broken supply, broken demand. All right. Let me put that here. All right. We're going to gray it out. All right. But you got to watch carefully. All right. Same kind of reasoning here. Price takes out this low here. Right. Takes the liquidity with a wick, but it doesn't give a close. So I'm looking for something that convinces me that price wants to go down lower. Now, when it comes down to broken supply, or broken demand zones, or broken supply, but in this case, it's a broken demand. When it comes down to that, what you want to make note of is the reaction. This is the reaction. All right. Come down, and that's the reaction to it. Okay. Now, usually I'll take my reactions when they don't come all the way through. This one is a technical break. All right. So I got to consider it just slightly differently. I got to be very careful with it. But right now I'm going to count this. I'm going to count this as a reaction, and I'm going to look at the reactions to take shorts from. You understand? All right. If price breaks through from here, all right, what you ask yourself is I'm looking for stuff, man. What you want to ask yourself is, price breaks through, what caused the break? Where did it originate from? Here. That's it. That's the mark. So if price comes back up to here, this would be a high probability short to take. Bam. Okay. We're well into the 50% mark. All right, we're well above the 50% mark. We're in premium prices. This would be a good point to take a short, just knowing that we're still within this trading range. All right, this would be right around the 70% mark, 65% mark, and that would make a very nice short. Now we want to get precise. We want to get precision entries, don't we? So we're going to look at that supply, and we're going to go down to the 4 hour so we can get a better look at the price action. All right. All right. This is a flip zone from demand to supply. All right. So price comes down, gives this big reaction, another reaction, boom, right? And then we start to drop, but we didn't get the break until here. What caused this? What caused this low? What high caused that low? Right up here. All right. So although I will keep this area, I'll look at that area, but you got to understand this was mitigated already, right? So this one isn't a very strong candidate for me to take a short from. It's already been mitigated, all right? The sell orders are taken, all right? For me, there's not enough sell orders in here for a price to make another push like that. You understand? So I'm not going to be looking at that one for shorts. Where would I be looking? Look at this. Price hasn't come back up here. This is an unmitigated order block. This is an unmitigated supply, okay? This is the one I'll be looking at. You understand the logic? If there was a wick, if this wick had extended all the way up here, I wouldn't be looking here either. All right, but because it's unmitigated and we have fair value gap here, or an imbalance, that's why I would refer to this supply as an imbalanced supply zone, all right, or imbalanced supply for short. I believe price is going to come up there. Another reason why I believe price will come up there is because we have relative equal highs here. Why did they disappear when I try to snap one? We got relative equal highs here. All right, so it gets a double. Okay. All right, we swept the high of this high. We swept this liquidity of this high here. Why won't you do this? Why won't you work? All right, we swept the high already here. And you see the drop off. I believe we're going to come back for this high on the way to the supply zone. All right, there's a chance of it. All right, now that's what I have in my mind. Now, I also understand that what could happen is price could come up here and drop from this point. We already have a liquidity grab from higher. We can come down lower. All right. I think the higher probability trade is here. All right. And if price, sets up this way, that's fine. I'll look at it. But what I'm looking at is, there's, if you're going to call this right here supply, if you're going to call this supply, it's already been mitigated. Prices, you see the wick going up in here. This is efficient price movement here. All right. So, if it goes higher, I believe it takes this high out. Unless this high, watch this now, unless this high takes out this low, it's a weak high and will be targeted for liquidity on the way to here. And this is where I want to take my short. Does that make sense? All right. Euro is one of the weaker currencies, and it was weak going into last week, but you can see it gained a little. It gained a little strength against the euro, against the USD. Gave it back, gave some back, gained a little bit more, gave some back. But this is all an impulse, and this is the correction. All right. I believe this correction ends here and comes down. That I said it 3 times already. That sounds like I'm going to be married to a bias, right? No, if price decides that it wants to come down from here, I'll be looking for a setup from there. All right. This is the higher probability trade. And this is where I would, keep my eye out. Wow, that's a big eye. That's a big eye. All right, I'm going to keep my eye out here. We're going to watch this POI here. This is our POI. Okay, so if it comes up here, that'd be great. And I'll wait for a short. I'm not interested in taking longs up to this point because it could turn around at any time. All right, this is a short-term trend. I don't want to go against that short-term trend. I want to go with the longer-term trend. All right, trend's your friend, of course, but the higher the time frame, it's best to go with the bigger overall time frame trend. Okay, I'm looking to take that one. You can take good trades here, but I don't see anything setting up that way. All right, so that's what I'm looking for, and if it happens, it happens, man. If we can make it happen, then we're gonna make it happen. We're gonna come right back down to this this weekly time frame demand zone down here, and this is going to be a very nice trade. If it comes up here and sets up, this is going to be the trade of the week. Okay, I will see you in the next video. Hey, I'm putting up videos that you want to check out on your screen right now. Click on the one to the left or right and enjoy, learn, and I'll see you in the next one. Okay, trade safely.